Hi, and welcome back to the Food Fund. In this video, we will be recapping the portfolio performance for May 2026. We actually had a decent month for the portfolio, and I added a new holding, so be sure to watch through the end of the video to find out what happened. Let's jump right in. Cue the logo. Let's start off with the market's performance. For the month of May, the S&P 500 gained about 5.2%. The market hit a fresh new all-time high. When we look at the companies that make up the S&P 500, we can see that tech led the positive results. Nvidia, Microsoft, Apple, Alphabet, and Amazon gained. Only Meta fell. Over in our corner of the market, non-alcoholic beverage, consumer packaged food, and farm products were mixed, while confectionery companies gained and alcoholic beverage companies fell. As for restaurants, most companies fell. May also had some notable events. Celsius saw insider buying with the CEO, COO, and a director purchasing a combined 24,375 shares at an average price of $29.39 per share. Dutch Bros saw some insider buying with a director purchasing 2,000 shares at an average price of $51.18 per share. Last, Shake Shack saw insider buying with the CEO, several directors, and the founder purchasing 52,616 shares at an average price of $61.44 per share. Insider selling could happen for many reasons, but insider buying strongly suggests bullishness from those who know the company best. In deal-making, Nelson Peltz shopped a bid to take fast food restaurant Wendy's private. Peltz's investment firm Trian already owns about 16% of Wendy's and have previously considered a takeover in 2022. As a company, Wendy's has been struggling for years, but a private revamp and new IPO in 3 to 5 years could garner Peltz a nice windfall. Okay, let's move on to the portfolio performance. I deposited $100 into the account on May 1st, 2026, and at the end of the month, the portfolio balance was $2,110.48. This means the portfolio lost just $4.36 for the month, representing a 0.2% decline for May. Given the S&P 500's 5.3% return, we lost 5.5 percentage points of alpha by following our strategy and not being invested in the S&P 500 this month. This is now the third consecutive month of underperforming the market. It never feels good. Looking at our performance chart versus the S&P 500 continues to pull away, though our portfolio is going very slowly. Since inception, the portfolio has had a minus 8.3% CAGR on a money-weighted basis, while the CAGR on a time-weighted basis was minus 4.4%. Given the S&P 500 18.6% CAGR, the portfolio trails the S&P 500 by a 26.9 percentage point CAGR since inception. The gap between the market and our portfolio performance is widening. Let's take a look at the portfolio holdings. Before we jump to that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Also, don't forget to turn on your notifications if you are watching on a mobile device. Okay? Wingstop's rebound has pushed it up to become my largest holding. With 3.48 shares at a cost basis of $177.48, this position is down 11.8%. Wingstop makes up 25.9% of the portfolio. I have continued to add to this position as the price action settles out. Unfortunately, the company is not growing as quickly as it used to, but I don't see it going out of business anytime soon. Next, Celsius is now my number 2 holding, with 10.11 shares at a cost basis of $30.49. This position is up 9.1%. Celsius makes up 15.9% of the portfolio. I added to this holding during the dip, and it seems to have paid off. I am content to hold for a while, but will add if there is a massive pullback. Now, Luckin Coffee, the Chinese coffee chain, is my number 3 holding with 10 shares at a cost basis of $33.47. This position is down 3.9%. Luckin makes up 15.2% of the portfolio. Luckin is my trickiest holding. The company is doing a great job of growing, and the valuation is attractive, but the persistent market discount for Chinese companies may never resolve. Still, I'll hold here a bit longer to see how things will shake out. Texas Roadhouse is my number 4 holding with 1.52 shares at a cost basis of $160.23. This position is up 12.7%. Texas Roadhouse makes up 13% of the portfolio. I have been working to boost this holding over 10%, and I'm glad to finally have made this sturdy company a key holding. The value that this restaurant offers its customers is unparalleled, and it should hold a stabilizing position in my portfolio. Skipping down to my new holding, Shake Shack. Shake Shack is my number 7 holding. With 1.6 shares at a cost basis of $62.38, this position is up 3.1%. Shake Shack makes up 4.9% of the portfolio. I opened a starter position after the large pullback following earnings. Don't get me wrong, the company does have problems. Costs are rising and debt is growing, but market share is increasing nicely. I will watch the price action for a bit, but am okay adding another tranche, especially if valuation improve a lot. Now let's look at Chipotle. Chipotle is my number 8 holding. With 1.49 shares at a cost basis of $30.90, this position is up 3.1%. Chipotle makes up 2.3% of the portfolio. Every earnings report from the company highlights persistent problems with rising costs and increasing competition. I have not been compelled to buy more on this pullback, but I'm not pressed to sell either. I can wait it out until the company's financials improve or opportunities elsewhere in the market open up. Last, let's look at the cash position. I have worked really hard to get this money into the market and now have a cash position of $111.39, or 5.3% of the portfolio, down from 20.9% cash last month. At this level, one am comfortable holding cash and waiting for opportune times to deploy. It is not a bad time to have fresh powder, in my opinion. 2026 has been a challenging year for the food industry and consumers alike. Inflation has been rising, hitting 3.3% annualized for core PCE in April, while PCE hit 3.8% annualized. The chart from the Bureau of Economic Analysis shows growing inflation month after month for the past 12 months. I don't think this trend will reverse anytime soon. The food industry is capital intense and will be subject to pressure from rising inflation for the foreseeable future. Still, people have to eat, and we will try to find portions of the market where food spend is aggregating. Many thanks for watching. What do you think about the portfolio performance? Share your thoughts below. It is always great to hear from you. Check out some more videos right now, and don't forget to put your money where your mouth is.